Welcome to another edition of Geopolitics and Empire. As always, the best way to support the podcast is by becoming a paid subscriber on the Substack. I've already mentioned before, if you're listening to this on Apple, Spotify, or other platforms, you're hearing ads. Those are necessary. So the podcast is free with ads, but I'm opening up an ad-free version. So if you become a subscriber on the Substack, you can listen ad-free to the audio or video. And if you become a member on Substack, that will allow you to connect Spotify and listen to the podcast ad-free via the Spotify integration. And I think I'm going to open up on Apple if you're listening. The premium version, haven't set a price yet, maybe $4.99 a month, where you can listen ad-free on Apple as well, because there's no other way I can keep doing this. It's not financially sustainable otherwise. People have been enjoying this for free for years. So if you're complaining because of the ads, what can I tell you? What can I tell you? And do check out some of my affiliates. They'll be having the Black Friday sales, like Above Phone for the de-Googled phone, or Start Mail, which I use. It's a good deal. They give you half off for a year, I think. So all of the links are in the description. Wise Wolf Gold and Escape the Technocracy. Joining us for the first time on the podcast is Miles Harris, who does fantastic commentary and analysis on X, YouTube, Substack. I discovered his work recently. It seems to be blowing up. Welcome, Miles.
Oh, thanks so much for having me on.
Tell us a bit about, you seem relatively new to the space, but your stuff is getting a lot of views. You're doing excellent commentary. Whatever you want to tell us about your background and the work you're currently doing.
Well, I first started studying economics at university, and I really enjoyed certain elements of it, and really got into some of the far less abstract elements. And that was great. But there was this whole principle at university where I was just like, oh gosh, what am I getting from this? And I really then started digging into transitional economies at the time, because this was to around about 2000. And then you had, of course, the opening up of the old Eastern Bloc, and the Soviet countries then really liberalizing. And I started assessing the different approaches that were underway in these different transitional economies, Poland, Hungary, China, and so on, and then really got stuck into financial crises and started writing my dissertation, my later master's thesis about financial crises. And in particular, I was investigating why China was so well insulated from any potential crisis. So, for instance, there were a series of crises in the late 90s. You had the Asian financial crisis, consisting of Thailand, Malaysia, Indonesia, South Korea, and so on. They went down like dominoes. Not long afterwards, in 98, you had the Russian financial crisis. And then things went a little quieter. You did have the collapse of long-term capital management, but nonetheless, other things didn't catch on towards China, despite the fact that it actually demonstrated many of the same weaknesses as these Asian tiger economies. And so that was my key focus, really. And my thesis was really critical of IMF policies and the conditionalities upon which these really stringent loans were imposed on the Asian tiger economies, and the privatization and the austerity and so on. And it really did look like a takeover was in place. And I started really sort of thinking about things slightly differently, despite being kept within the mainstream there. And I think over time, I've just become more and more aware of all of the nefarious ways of international finance and economics and so on. Yeah.
Yeah, I've had John Perkins interviewed him a number of times, and yeah, he talks about what you mentioned, the economic hitman, right? Using the Bretton Woods system, IMF, World Bank, to, like an octopus, taking, like an alien invasion force, Borg, to take over country by country the planet. Just real quick before moving on, I'm curious, could you just quickly explain why is it that China was so insulated? Was it because they don't have as many of the IMF type of tentacles?
Well, interestingly, in comparison to Russia's liberalization in its opening up to Western finance and the so-called market-based economy, Russia tried to do that overnight almost, and it was called this Big Bang shock therapy, and it was just an opportunity for plunder and huge profiteering at the expense of the Russian people ultimately. Meanwhile, China had adopted a very, very gradualist, careful, incrementalist strategy towards its liberalization. And one of the foremost elements there was the fact that it had kept its capital account closed. And so while these other Asian tiger economies were borrowing lots and lots of overseas currencies, and particularly dollars, they were borrowing lots of dollars because they had a fixed exchange rate. China also had a fixed exchange rate in operation, but it wasn't open to the same degree of capital flows ultimately. And so what therefore happened, as soon as the capital then started to leave these Asian countries, the exchange rate pegs for each of these countries broke one after the other. They all tried and failed to actually prop up their currencies with both interest rates and huge foreign exchange spending, but of course, all of that was ultimately captured by the speculators, who were almost making a bet which they couldn't really lose upon, because either the exchange rate maintains its same rate or it falls, and you profit from that short trade. So the only potential loss they were facing was the actual fee for the borrowing the capital there. And so China did not open and allow itself to actually have those same financial flows coming into the country. In addition to that, it also had a high level of foreign exchange reserves, very, very high, substantial level. I can't remember the exact rate off the top of my head, but it was very considerable, far higher than it is now. And that also acted as a strategic tool.
And real quick on academia, I have this I've had a number of guests that were, let's say, former academics. I was an adjunct of international relations and I taught at high school as well. And you find that there's really in most, even the topics that we discuss, little critical thinking in the ivory towers academia. And then to find real truth, you have to go outside, because once you start asking the right questions, you get censored. People have been blacklisted from academia, and I even lost. They refused to. They took away my classes for 2 semesters because I was teaching truth. I eventually got them back because the director was given a promotion and moved on. But anyways, just a quick thought on the academia. Would you agree that to find the truth, you have to go outside of that space?
Yes, without question. Without question. And it's something which is often coming up in family and friend discussions with kids and so on. So I've got a teenage lad, very academic, but he's interested in law, but he doesn't want to go to university. I'm trying to put him off the law, but he's very, very wise to the world though, and very switched on, and is just like, no, I'm not going to do that. And of course, when it comes to any sort of schooling, certainly around the Western world, it's always about pushing these kids through to universities, and that's one of the key metrics that they seem to be assessed upon. But yes, there's little truth to be found there, really.
Yeah, and we mentioned law. It's like we live. There are no laws anymore. Might makes right. Anywhere you look, the crooks get passes, and the little people get attacked by the courts. Just maybe before delving into some of your specialties, such as digital ID, just to get your quick thought on whatever one wants to call it. The New World Order, this Great Reset, right, or globalism, if you will. These plans, I think it's become evident to many people all over the world by now that there are these plans to implement global neo-feudalism. Just what's your sort of understanding of that?
Well, I think what they're essentially doing is they realize that in the Western world, in particular, the debt-based system just cannot continue to go on. We can't continue to support ever growing debts without a big change to the whole economic framework. And I think it's becoming increasingly evident that many of the dominant central banks of the world don't actually want to hold as much sovereign debt. And I find that very interesting, particularly when you have the likes of Larry Fink perhaps referring to unlocking private capital. So unlocking people's money into in their own bank accounts, in essence. And so a lot of this debt is ultimately being passed on to private individuals, and there's various means that they're using to actually offload this debt. But clearly, they want to clean up their balance sheets. Now, that's not all central banks, of course, because at the periphery, numerous central banks will still continue to hold high degrees of treasuries and so on. But there is a definite need for them to actually clean things up because it can't continue to go on. And in addition to that, I think if you consider an overall meta state, a state beyond national governments and their state apparatus, there's a desire to gradually offload their dollar debt, their dollar assets. So that is the big trend, I think. And that is why we're seeing a gradual shift towards multipolarism, in my opinion, that it ensures that if they were to sell all their dollar assets now, well, that all of the markets would crash and the value of their assets would greatly diminish. So far better to actually adopt such an approach over a long period of time. And of course, if you look at gold purchases, for instance, well, Russia, China began their purchasing after the 2008 financial crisis, as quantitative easing really took hold in the West. And so I think it goes back to then as a sort of fundamental change, but then it goes back far, far beyond that in terms of the overall strategy and the pipelines that are being built.
I was going to ask you this later, but you brought it up. Get your thought on multipolarism. So would you see it as a strategy? I was listening to Luke Groman on Mario Naval's X podcast over the weekend, where Groman said de-dollarization is US dollar hegemony, like 2.0 or 3.0. And then you look at, you talk a lot about digital ID, but you see all the BRICS countries are all implementing the same sort of stuff. And for me, it seems like multipolarism. So would you say it's a way of slowly transitioning the West and sort of, I still see it as pushing forward globalism, multipolarism, because it's more like a world federation, which would be a proper world government. Just any thoughts on BRICS and the multipolarity?
Yeah, certainly. I think really it goes back at least to the formation of the Trilateral Commission back in the 70s. And then you had China's opening up. And suddenly, of course, they really shifted their transition in 1978 under Deng Xiaoping. And they began these gradualist incremental reforms, which have proven hugely successful, by the way. At the same time, what has also happened is you've had a number of supranational institutions really getting behind this. So the World Bank in 1997 produced China 2020 report. And in that report, if you read it, it very much explains how their intention to set up or to ensure that there are capital transfers that are taking place to support China in its ambitions for its growth ultimately. But not just the capital, also to actually transfer the human capital as well, so that they had the right sort of managerial capabilities to enable their manufacturing processes to really take off, as they did post 2000 in particular. Then you had Goldman Sachs, of course, and Jim O'Neill supporting and actually creating the BRICS brand itself in 2001 under Building Better Bricks. And the same year, you also had China's accession to the World Trade Organization. And that was absolutely profound. And you can see China's growth really take off then as a result of its export-driven processes. And of course, there's also been the largest migration in human history of people in the western hinterlands of China moving to the east to actually support this production-based economy as it was. Now, you could certainly argue now it's simply about an infrastructure-based economy. Now, what's also, I think, quite revealing about all of this, there's various other examples I could continue to cite there, but what I find very, very interesting about China is that it has not then moved up into the next level to really develop its consumer base. So it has developed a huge amount of excess capacity at the industrial level, and it has a lot of deflation as a consequence of that. But it hasn't really taken up the consumer mantle as you would expect, and it therefore is actually lagging other nations that have actually developed. So if you look at the so-called NICS countries, Taiwan, South Korea, and so on, those countries that actually did make that transition from middle income to developed nation status. So I find that interesting that China is almost being held back a little there. That's quite an interesting dynamic, which I think is rarely actually picked up upon.
Why do you think that is? Is it because it's something to do with the CCP's inability to get there, or maybe what it seems you're alluding to, the Trilateral Commission technocrats that want to keep China on a leash? Because maybe you're familiar with like Anthony Sutton, back in the day with Patrick Wood, talking about these ideas of convergence. Because again, I feel the goal is a world state, and they need to converge east and west. In fact, this morning on LinkedIn, I follow technocrat Parag Khanna, who's written many books on technocracy in America, and he said he was begging the question G2, because you had the meeting with Trump and Xi Jinping. And again, it's kind of interesting along this theme of convergence, where he's now positing, this leading technocrat, can we form a G2 between China and USA? So do you think they're intentionally being held back by the technocrats?
Well, I think the quality of the economic reforms that have been introduced over the first sort of 30 years in particular were absolutely right, and were almost sort of spot on. And you can see that with the reduction in poverty that has taken place within China. And it's just about being eliminated. Now, that really does point to the fact that they were doing everything right in many ways. For instance, they were making sure that their small businesses were supported by banks which almost disintermediated big banking institutions in terms of credit allocation. And of course, that's one of the most important things within any economy, who is actually allocating that credit, because that is the purchasing power. And if you're just giving it to rentiers to actually finance asset prices, then you're going to drive up asset prices, and you're going to generate an asset-driven financialized economy, which produces very little. And of course, there's a brilliant example here in the UK. But if you actually want to generate lots of growth, you're going to support businesses in local communities so that they can actually develop, and actually then you can pick out who really has the most potential to grow even further, and they can be further supported. And that's really what they were able to do so well, to actually ensure that they did develop that export-orientated growth model at the same time as having a lot of state support in building the infrastructure. But of course, there has been a clear shift now towards financializing as well, and they've taken on a huge amount of debt. Now, that debt is not external debt in the same way that US debt is external, because of the capital controls, in essence, that still remain. The fact that the currency isn't easily convertible. So where does that leave us? Well, it means that they have generated a lot of productivity, but there's nothing in the West. And I find that quite remarkable, really, that everything is being developed in the East, but there's no means to actually really develop anything in the West. So it's clearly a decision which has been made. Perhaps they want to just make sure that they've got enough industrial capacity to support the net zero agenda and getting all of the green energy resources and so on produced. And of course, India is stepping into the fray when it comes to that now as well.
When you meant the West, you mean like the West, like U.S., Europe, that there's this talk of, we don't manufacture anymore. They want to bring back manufacturing. Is that the West that you were referring to? And do you think they'll ever be able to bring back manufacturing to the West?
Well, yeah, there I was referring to the sort of crazy net zero approaches that are being utilised, and what that's creating is enormous demand from China and also India now, increasingly India. And so I find that, again, a very interesting dynamic, because that's one of the key reasons why we've seen silver, for instance, really take off in price recently, because it is demanded as a value-added product in the West as a source of these renewables, whether it's solar panels and so on, EV cars, etc. So that's very interesting. But of course, yes, there is also the element there that there is a need to actually start reshoring some manufacturing as well. And that fits in with the overall logic of this notion of multipolarity and differences between China and the US and so on, which I personally don't buy. One of the biggest tells of that, I think, is the fact that the monetary messaging pipeline that was being constructed around about 2000 and was first trialed in 2004 is the ISO 20022 pipeline. Now that is a massive step change. It is actually needed to actually improve cross-border payments, because I'm sure, as you know, that making payments across borders can be problematic and it can be expensive. So there is a need for it, but what that also enables is all sorts of metadata to be attached to this messaging pipeline, so that you have all of the KYC, digital identity elements all brought into that, as well as the potential for smart contracts as well. And so while we've got this supposedly diverging world, we've actually got a converging monetary system. And that to me is the biggest tell.
And yeah, let's continue there then to the biggest. One of my past guests, in 2020, I always reference people like Edwin Black, who I had on the podcast, who wrote IBM and the Holocaust, and he calls this the algorithm ghetto, right? Some people call it the social credit system. I get sort of annoyed with the people who say there's no social credit system in China. It's like, yes, there is, but okay, we can just play with words. They have an algorithm ghetto. In the West, we have a social credit system. We have an algorithm ghetto. As you mentioned, they're building out electronic concentration camps, cyber gulags, whatever you want to call it, technocracy, algocracy, ruled by AI algorithm. Would you say this is sort of given that you cover this topic primarily on your YouTube, would you say it's sort of the most important of our day?
When it comes to digital ID?
Yeah, all this stuff with the digital IDs, CBDCs, and digital passports. It's effectively, this is a totalitarianism that we've never seen in human history, no?
Yes, correct. Yeah. So with digital ID, of course, that very much is the foundation layer, which then acts as the key to this whole digital based system. And then the padlock, which the key then unlocks, is the KYC element. So ultimately, I think what we're going to see is all private institutions wanting to actually have know your customer in place. And so as soon as you remove cash, and the fact that that's anonymous and offers you the ability to pay without with privacy, then yes, it's certainly a very, very worrying direction we're going, because we're looking at one anchor point, one single point of control, as well as one single point of failure as well.
So how would you sort of explain from your research and vantage point what it is that they're doing? Because it seems like they're building this architecture where you're going to have, as you said, digital ID, everything's going to be linked to KYC. The cash will no longer exist, and you'll have to use digital payments, so they'll see everything that you're buying. That can be factored into social carbon credit scores, which then can affect what you can buy, when you can buy it, programmability, geolocation. So how if you go outside of your jurisdiction, like in the movie, was it with In Time with Justin Timberlake, or Hunger Games, like districts or Maze Runner, things like that. And then they've got a couple that with the surveillance and the AI and the facial recognition. You did a video where you talk about the entry exit system that's now being activated in the EU, where they take your biometrics and irises, and then following that, in the UK, you already have I call it electronic thought crime authorization, ETA, electronic travel authorization. So you've got a passport, you can go to UK visa free. Now you have to fill out a thought crime authorization, pay £20 or whatever, fill out a form. If they don't like the way you think, you cannot go to UK. And I've already read reports of how this has happened to people. And so just your further thoughts on, do you see like this bigger thing, this bigger dystopia that they're building?
Yes, well, you really can see how the world is being subdivided into regions, courtesy of this multipolarity, really, and the multipolar system. So yeah, it's and it is very much like the Hunger Games. You say there that we are being almost just put into these different regions, and so you've got the US, which is going to be responsible for supplying global dollar liquidity and continuing to offer treasuries. You've got China, India, which are going to continue to develop their physical collateral element, but also be the sort of manufacturing hubs of the world. Then you've got the GCC, the Gulf countries there, who are almost going to be a sort of monetary bridge between East and West, as well as providing energy alongside Russia there. And then we've got Europe, which is just going to be left in a state of decline, I think. And yeah, it's very, very worrying, because you can certainly see a time where you are going to be expected to use your Gov wallet or whatever equivalent to travel between borders. And that time doesn't seem to be that far away, sadly.
And so, for example, would you say that if you do something your regime doesn't like, they can effectively disable your wallet or limit your purchases and stuff like that?
Yeah, well, I think there's a very interesting pilot which is taking place in the UK at the moment. Now, that pilot is being run by the Bank of England alongside the 6 major banks of the nation, and that is to run tokenized sterling deposits. Now, tokenization means, in essence, creating a digital representation of an asset. So what that therefore means is, when you deposit money into an account, then tokens are issued or minted, which match that deposited money. So £500 of money put into the bank turns into £500 of tokens. Now, those tokens are then secure on a blockchain ledger. So that means you're essentially now looking at a medium of exchange with a memory. the interesting or the worrying part of that is, of course, that it's not fungible. So there's complete history attached to that money, wherever it has been and what it has been used for, because every token will contain both information and it will contain rules. So the information will be what the asset is, what it was used for, dates, time, transaction, and so on. But the rules could well be smart contract-based rules, which could be about disbursement of money for payment on arrival. So, for instance, you order something on the internet, and when you sign for it, the money is actually dispatched. So you don't actually make payment until the goods arrive at your place of residence. But more worryingly, the rules element could also include, of course, the carbon scoring, the social credit scoring, and yes, it could even as well. I think Claire Wills put out an article yesterday, which I still need to read, which is just about the potential for dynamic pricing, and the fact that actually you might need to scan a good in a supermarket, and that price may then change based upon who you are and what your scores are in relation to carbon metrics or other metrics that might be used. So in essence, it's therefore governance by code. So whoever writes the code can determine all of these factors.
Algocracy, again, as Nick Bostrom and others posit. So, we have the CBDCs. So would you say some jurisdictions will use CBDCs and others will use PBDCs, private bank digital currencies like stablecoins?
Yeah, so of course we've got another divide taking place there, where we've got the US focusing on stablecoins, which of course are still programmable. They allow for complete surveillance. In the UK, as I mentioned, we've got tokenized sterling deposits. In the euro area, of course, they're looking at a CBDC. Now, when it comes to the central bank element within this, ultimately they're using in the UK and the euro area a single unified ledger based system, and that enables DLT technology to be used. So that's distributed ledger technology. So instead of having a ledger for each different bank, you have one ledger which the central bank can oversee, the government can then oversee, regulators can oversee, and it ultimately ensures that money can be moved instantaneously. And so it's almost like one source of truth for the entire economic system. Now, when it comes to the pilot in the UK, there's three main areas of focus here, and those are the use of online marketplace payments, so making payments online in essence. So that enables the sort of programmable element and finding out what people are spending, where, and so on, but also enables them to test conditional payments. Then they're looking at wholesale bond settlement, and this is where they want to have what they call composability, where you can easily change money from your bank account into tokenized bonds, in essence, and that's really a new level, because on this single unified ledger, they want to have central bank money, they want to have tokenized deposits, then they want to have the government bonds, and then finally they're looking at the remortgaging process. So in essence, they're looking to tokenize mortgages and have those on the same ledger base as well. Now, what that means in aggregate there is that you will effectively have a balance sheet which is overseen, your own personal balance sheet, effectively overseen by the central bank and by the government, in addition to the money that you're spending as well. So everything will be tracked and almost traced there. And it's much the same sort of system in the Eurozone. However, the difference in London, I believe, is because the City of London wants to lead the way when it comes to tokenized settlement. Now, that's my hunch. And they have long maintained a sort of clearinghouse role within the world. And I think they want to maintain that role. And hence the City of London will still do quite nicely out of all this multipolarity, and particularly because it's a hub for RMB trade as well.
Always comes back to London and the British and Anglo-American establishment. Would you say, for many decades, New World Order researchers would talk about, this one world government, one world currency. But I've been thinking as of late, and what you sort of explained, that maybe we won't have per se a single global currency. I mean, there are people who talk about the IMF special drawing rights as a sort of a world currency. But if you have this system, this unified sort of digital ledger, as you mentioned, and these different regions, everything becomes interoperable, like into one ledger, then you can have the same, would you say you can have the same sort of control at the global level in this, asymmetric myriad type of interoperable system, and you don't really need overt global currency?
I think that's very true. And I think when it comes to the BIS vision there, they want a system which is interoperable, as you say. They want to have flexibility within this system as well, so that they can, if necessary, convert depositors' money to government debt, to help bail out the government, to help ease a sovereign bond crisis. And in addition to that, they want to make sure it's regulated. And of course, as I mentioned, when it comes to the unified ledger there, you've got the central bank and the regulators and the government who can oversee all of this. And in addition to that, they want it to be a programmable system so that they can update the codes as necessary. So that's where you could then have an algorithmic bail-in, for instance. Now, they've been running various projects to experiment with this. So, for instance, I've had Project Rosalind, which has looked at the Bank of England and central bank digital currency style system at the retail level. Then, as a cross-border element, they've been using Enbridge, and they were backing that quite heavily with China, the UAE, Hong Kong, Thailand as well. And they've now stepped away from that because that is a system which actually bypasses SWIFT, of course. So that was, of course, going to be really working against their stance, where they pretend to be unbiased and just don't take any sort of side, because of course that is working against dollar hegemony. And then they've got at the macro level Mandala as well, Project Mandala, which is enabling them to actually operate sanctions at a macroeconomic level, as well as regulations and having bank policy implemented at that macroeconomic level.
You've got some great X posts. I've finally done it. It took me like a few years to get used to not saying tweets, because it's no longer Twitter.
Oh, I'm not sure I'm ready to do that.
I finally realized, like, I used to be, even though it was X, I would say X, tweets on X, and now I've reprogrammed myself to say posts on X. But you had a recent one related to stable coins and the Genius Act, and just to get your thought there, where I've been saying lately, I've interviewed a lot of prominent people, collapsologists, so to speak, who talk about the collapse of American empire. And I've been saying that, we're on Bretton Woods 3.0. So it was the gold-backed dollar, and then there was the petrodollar, and that system has run its course. And now it's like they're trying to back the dollar to keep the Ponzi scheme going, to back it with these energy certificates like Bitcoin or the digital dollar or stable coins. And Brent Johnson and a few others have posited it. And I think there's some sense that, so I can see it going either way. I can see the US sort of collapsing, but I could see them succeeding in this whole stablecoin Genius Act operation that they're deploying now to, as you were alluding to earlier, sort of like dollarize the rest of the world. And America, it's like America 3.0 I mean, does any of that make sense of what I'm saying, and just your thoughts on what's going on with the whole stablecoin Tether Bitcoin Genius Act operation?
Yes, well, as I mentioned earlier, it's about unlocking that private capital, and they're all at it. So whether it's tokenized deposits, whether it's central bank digital currencies, or whether it's stable coins in the US, it's all about unlocking private capital. Stable coins for the US, however, they perform a unique role, which is necessary to the role of the dollar as it is right now. Now they're quite happy for the dollar as the global reserve to continue to decline gradually, I believe. And stable coins help to ensure that globally the dollar continues to proliferate. And particularly now, what is significant about stable coins is that proliferation can take place at the retail level. And so it means that if you are in a developing country and your currency is coming under lots of pressure, you're fed up with it depreciating, it means that you can download your digital wallet, you can use your digital ID to unlock that wallet, and you can deposit money in and open up a stablecoin account. Now, when you hold a stablecoin, what that means is that you also hold by proxy short-term US Treasury debt. So you've got a one-to-one backing there in essence. So when you deposit money, the actual company, whether it's Wells Fargo, whether it's PayPal, whoever it might be, will then buy an equal amount of treasuries, US Treasuries, short-term debt, so Treasury bills, and you will then hold a token, a newly minted token. Now, this sort of thing has been done before, a good sort of 400 years ago, which is quite interesting. So you've got this stable coin now, but you don't actually generate any of the yield. So you don't get the yield from the treasuries. The company that issued and minted that stable coin gets the yield. However, you bear the risk. So if anything goes wrong, then and the peg breaks, for instance, then of course you're going to lose your money. And when it comes to central bank backing, at least with these tokenized deposits or the central bank digital currencies, you've got the central bank backing it up, but you don't have that when it comes to a stablecoin system. Now, I think this will do very well, and I think the actual demand for stablecoins will be very significant. After all, the private companies themselves have an incentive to really sell stablecoins and ensure that people actually hold stablecoins because they generate a yield from them. And I don't know whether you've ever seen Tether's profit per employee, but it is absolutely vast. So they absolutely dwarf Nvidia when it comes to the profit per employee. And it is going to be enormously profitable for these companies if they do it for, say, 10, 15 years or so. And what that enables is of course, a global proliferation of these stable coins to take place. But there are a couple of things that concern me with them, because profit and stability pull in different directions. And so these firms are encouraged to actually pursue profit to generate the yield, because you're turning public debt into a private revenue stream ultimately. So they want to get a hold of that revenue. But that encourages them to actually not back one for one. That's a worrying aspect. And a second element that does also bother me as well is the fact that if they really do take off and they grow considerably, and there's some projections now saying that they could reach $4 trillion in market cap by 2030. And then, of course, with leverage, then that can be tripled as well. So what could happen there is that yields on debt may come down. If yields on debt come down, well, that almost incentivizes the government to actually spend more. And what you're then dealing with is an asset which increasingly becomes a risk vector as debts go higher and higher and higher. And so, yes, there's longer term some worrying elements to them.
You mentioned it was done 400 years ago. I mean, were you referring to tulip mania, or what were you referring to?
Oh no, it was that sort of time actually, just before it. So yeah, the sort of much hyped tulip mania was what 1620s. Yeah, but it was the Bank of Amsterdam, and yeah, it's essentially it's very interesting there as well. The BIS chose to write 2 papers on this in the last few years as well, and so the Bank of Amsterdam was offering a stable ledger, apparently, for bullion that was deposited with the bank. Now, it was very much a case of problem, reaction, solution. And so the problem that had somewhat been created was one of debased and clipped coinage. And so what would happen is that merchants would then deposit their bullion, their coins, and they would be weighed, and the bank would then say, right, well, we're going to back this 1-to-1 with the bullion that you've now deposited. So you would get the ledger entry, and they would hold the bullion. But what they started to do then was to integrate with the Dutch East India Company, and they were lending lots of this silver to the Dutch East India Company. And the Dutch East India Company were then exporting the silver to India and China. Now, they were doing that because the gold to silver ratio was far more favorable out in Asia, in essence. They overvalued silver because silver has long been a tool of money in the East, whereas silver was very much undervalued back in the West. So you had very different gold-silver ratios. And so they were bringing back gold, and then they were taking more of the silver that the Bank of Amsterdam had, and again, exporting it back out to take more gold. And so, yeah, I mentioned that profit and stability, they pull in different directions here. And so, of course, it wasn't long before people were like, hang on, I want to withdraw my funds here. I want to take my bullion out. And then it generated a run on the bank. And of course, the bank ultimately collapsed. And in many ways, it can be seen as the first sort of proto-central bank. Yeah.
Do you think the stablecoin play then is, do you think it's going to succeed long term? And do you think this is going to maintain American power, help maintain its dominance and power of the US?
I think medium term, it will do well. I think medium term, it will do well. My greater concern is that all of these mechanisms that we've talked about are almost like transitionary tools to move us towards full central bank digital currencies in the future, and that overall one ledger system. Now, at the moment, it's almost like that incremental strategy, particularly in the UK, because the tokenized sterling deposits, which makes it look market-led, and involving these banks within this program makes it appear to be something that we can really get behind. It doesn't disintermediate the banks themselves. So it's not like the central bank suddenly needs to create millions of citizen accounts as it would for the CBDC. But it does create the architecture which seems to enable a smooth transition to a CBDC in the future.
What are your thoughts when it comes to the cryptos such as Bitcoin, Ethereum, and others? Do you think they will simply become a part of this system? You see them now, all Stripe and Western Union and PayPal integrating Bitcoin payments and all this. So will that just form part of that blob where people can buy stable coins, they can buy Bitcoins, or do you see at some point Bitcoin losing its value?
I think there's a lot of support pushing behind Bitcoin. And uh, I would love to see it as something which could truly liberate mankind and could be used as a form of peer-to-peer cash. It doesn't offer fungibility, of course, and it seems to now increasingly replicate many of the weaknesses of gold, as far as I'm concerned, in terms of the fact that the transaction costs can be high, that you also don't actually want to spend to store a value. So if you know that the value is going to increase, as many Bitcoin proponents argue, then, well, why would you ever want to spend that? And then, of course, there's the element regarding the off ramps as well, and so the intention is to ensure that you can then only bring it in for your stable coins or for tokenized deposits, CBDCs, etc. So yes, I think it will continue to do well, though. I think that they are putting a lot behind it, and I think by Bitcoin doing well, it almost encourages more people to actually participate in the crypto market. Now, that's not to say that I've looked at the charts or anything short or medium term there, but I think, the trajectory is somewhat clear that they want to support it.
Thoughts on gold and silver?
Yeah, I think when it comes to gold, it has always been used as a means of refuge among elite communities for every crisis and for every sort of transition rearrangement. So I think gold will continue to do well. I think they're deliberately making sure that the BRICS nations develop that physical collateral element. I think the fact that we've seen so much central bank buying is, of course, a massive signal to the market, and they realise that, and I think they're going to make sure that there is volatility, of course, to shake people out of the market and encourage them to sell their gold. Longer term, there are, of course, still certain issues there that, of course, they increasingly want to tokenise gold, and when it comes to selling gold in the world of digital ID, it's a whole brave new world, so to speak.
And on that note, do you think when it comes to barriers that they have in rolling out, as you say, this global sort of unified ledger CBDC system, and that includes the digital IDs in each country, digital passports, digital wallets? I was telling the story recently. Someone I know unwittingly, here on the streets of Mexico, Sam Altman's World coin, now called World, is giving people 400 pesos, $20, to scan their eyeball biometrics to create a World wallet. And someone I know unwittingly did that. And so, and then, as you mentioned, I think you mentioned earlier that some countries are less developed, but I see a lot of leapfrogging. World Bank is coming in. Bill Gates and Melinda Foundation is coming in and giving these third world countries a pile of cash to create their digital ID. And most people have smartphones, so you don't even need the infrastructure. You just got a smartphone. You got the satellite 4G internet, and the government needs to develop its digital ID to force its citizens onto the digital plantation. And so how successful do you see them being, and what barriers do you think they're going to have in trying to implement this technocracy, algocracy?
Well, of course, pushback is the number one element that we've got to do to resist this as long as we can, and if we can slow it down, well, that would be absolutely huge. I think ultimately what they've effectively done is, are you familiar with the Boston matrix in marketing terms? It's essentially a means by which companies can actually assess their product portfolio. So if you consider every country to be an effective colony, you're therefore going to actually determine, right, well, which countries do I really want to invest in, develop? Which countries can I continue to actually rinse money and take money from, so-called cash cows? Which countries should I actually invest and support? So the likes of India we've mentioned previously, so that they're almost like the rising stars. And I think what they've done is actually determine and work out which countries they want to support, which countries they're just happy just to leave to control themselves, to ensure that domestic governance keeps everything relatively compliant. And Europe is, of course, the key example there. It is, in terms of that product portfolio, the dog product. It's market share, its market potential there is just being reduced. And we've now seen the financialization of Germany, and that really is the hammer blow on Europe. And of course, we're only really left with Poland that's doing well. But I think America will continue to be that cash cow, a mature cash cow, and we're seeing a degree of reinvestment take place. Green policies aren't as extreme as those in Europe. And of course, it's got access to its own energy, whereas Europe is denied any sort of friendship with Russia, or when it comes to the UK exploiting North Sea oil and so on. So those elements I think are important. And then looking east, of course, they really want to support India, and they will continue to support China as well. Then where are you looking? Yeah, I actually did a video looking at the digital ID rollout. And, if you're a real freedom seeker looking to hold out as long as you possibly can, well, your options there are somewhat limited. Afghanistan, Pakistan, it's Democratic Republic of Congo. It doesn't look so great. But then you can actually focus on, right, which countries actually have a high cash usage rate. And so, interestingly, you've got countries such as Romania and Bulgaria, which stand out there in Eastern Europe. But we certainly need some pushback. We really do. Because, the trend is worrying, to say the least.
So you'd say there's really, apart, those countries that you mentioned seem to be holdouts for now, but really, to get the gist of what you're saying, it's global. So you really can't. There's no good place to go, is there?
Yeah, it's certainly a global rollout, and that's right. It's a global digital gulag which is planned, but because Europe is declining so quickly, then it's a real rush to get it out there in particular first. And so I think that's almost like their dominant thought process, and so that's where we see the biggest real advances, I would argue, when it comes to the tokenized deposits and the CBDC element. But yeah, it is global.
Have you mapped out things, maybe for yourself, things people can do living within a digital ID society to try and maintain freedom? Like, you just try to use basic common sense. It's like, you don't. I think the biggest is trying to limit the data that they have access to, right? So using de-Googled phones, Linux, VPNs that can, for your phone, give mock GPS location so that the apps don't even know where you are. Again, these are limited efforts, of course, using cash, having real assets, gold, land, tools, stuff like that. not complying, not signing up with their edicts or apps, holding out for as long as possible. Again, having multiple citizenships, residencies. Any thoughts on how to sort of try and survive the Hunger Games for as long as possible?
Yeah, as you say, it's very much about those raw material elements, or those basic resources that we need to have in place, I think. But we've got to work on our skills base, and we've got to work on and within our communities as well to make sure that we've got the support necessary for us to actually almost straddle the system somewhat, if it eventually comes to that actually, right, okay, can you have one foot in, one foot out, and make sure that you do limit the exposure that you actually have, and that you do continue to actually make conscious choices with the purchases that you make. And that is perhaps one of the most profound decisions that we get to make every single day. So where we choose to spend our money. So I think that's one of the biggest factors that we can do on a day-to-day basis. But yeah, in addition to that, we do need to think about those key skills: building, electricians, plumbing. These elements are very important, alongside sustainable farming, and that's what we need to start turning towards.
Yeah, I mean, even in my own house, the minor repairs that are needing to be done, I've just been fed up, and the high prices that these people charge, and having to wait, and then the crummy jobs that they do, and to your point, it's like, I'm just gonna try it out myself. I'll learn the skill. I might screw up, but eventually I'll get it, and I'll save money. And and so, is there anything else you think that's important to get across? Other thoughts?
Yeah, well, I think just on that point, I've actually done a video on my channel which looks at the aftermath of the Black Death back in the early 1350s. And there were still people that did well, despite the absolute hardship that they faced after that. That sort of great taking that had effectively taken place then, and it was those elements, having tools, having the actual knowledge to actually be able to produce something, to be able to actually engage with your community and gain mutual support, as well as having those hard assets for hard times. So I think those really are the lifelong lessons that we can really take away there. The more we can focus on that, the better, and the more we can support small businesses who are actually doing the right thing. Well, we've got to do that.
Yeah, I think that's also important. It's trying to starve the beasts, and not shopping with the big globalist institutions. If you have any final thought, I mean, are you optimistic, or are you sort of like, do you oscillate between, like I do, between pessimism and optimism?
I do oscillate at times, but at the same time, I'm grateful to be here. I'm so grateful to be here. I'm so happy just to actually kind of get my word across as to what's going on, and get that sort of truth out there, because at least people can then actually start to make some preparations, and the more people we can reach, well, of course, the better, and the longer that we can hold out, because things are grim, but what we also need to do is really focus on those key elements within humanity, and that is love and being, and there's just so much magic in the world, and all we can be is the best that we can be, really. So that's what we need to do. We need to be the best we can be.
Yeah, and you made me think of, I love the website artofmanliness.com, and a lot of the stuff that I've learned from there, and made me think of what you were saying, like grit, and kind of what you're saying. I'm thinking of Teddy Roosevelt again, being the man in the arena, throwing your hat in the ring, and I'm throwing a little at some of the people sometimes who criticize me, the anonymous people who complain about different things. It's like, become a man in the arena. Give me your real name. Put your real name out there, and to go with the thoughts that you're putting out there. Put your head above the parapet, right? Become a man in the arena, or shut up. So, uh, anyways, thank you, Miles. Your links are in the description, but where are the best places for people to go? Do you have any projects, services, stuff like that?
Yes. So, of course, you can find me on YouTube. So, if you search up Miles Harris, I should come up. Likewise on Substack and on X there.
Well, may the odds ever be in your favor.
Oh, thanks ever so much.